Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for another CSE podcast. I'm joined today by one of my favorite co-hosts, Brent Gilchrist with JDS Mining and Dean's Knight. Thank you for joining me, Brent.
Always a pleasure, Anna.
Okay, so you are CEO of Dean's Knight,
Right.
And you are president of JDS Mining,
Yeah,
correct?
JDS Resources, but yes, it's a dual role, but there's a lot of crossover in both of them.
Okay, so this is important to talk about because I think it gives really good perspective on why we care so much about what you think about the resource sector. And that is because JDS Mining is in operating as far as exploration and mining, right?
Yeah, more on development side, like we typically get involved as consultants, and I'm not an engineer or geologist, but we have a lot of them on staff,
Yes.
And constructors. So we typically get involved after exploration when you have something, it's time to put engineering studies together, and then the next step or a few more steps, it's build the mine. And so we do a lot of that, and we've done
Okay.
it for ourselves, and we do it for lots of customers as well.
And as an investor, that's the most exciting time to be investing in a property, right? Is after
Well,
they've done the exploration?
Well, I
and-
think exploration. I mean, typically your success in, if you have successful exploration, it's a really great way to make a lot of money. But as everybody knows, there's very binary outcomes at times, and a lot of times it takes a long time to develop a resource.
Yeah.
So there's definitely a lot of risk in exploration investing. When we get involved at JDS, we're typically now looking at, is this an economic deposit? The deposit has been somewhat defined, and if it's economic, we can move forward through studies and permitting and development or construction.
Right.
And if it's not economic, the explorer likely has to go back and drill more or continue to try to develop that resource.
Right. And this has also given you, a very close view on a lot of operations in Canada and globally, right?
Absolutely, and it is global. The business is so
Yeah.
global, although I think many people don't know that we are the best and biggest miners in the world here in Canada. We have the most talent, and
Yeah.
my Australian friends might disagree a bit, but because they're
They
excellent,
will.
they're excellent at it too. But most of the financing still happen in Toronto, Vancouver, and some in Montreal.
Yeah.
So we're the best at it in the world. But we do it all. We export that expertise and that capital around the world. I wish we'd do more in Canada.
Yes.
And we're all talking about it, but
Yeah. We're going to touch
got-
on that today
good,
because I want to
good,
know your
good,
I want to know
yeah.
your thoughts on
You
that. Okay, and you told me something once. This was at a cocktail party, so you might not remember, but it was the number of gold companies based in Canada. Is that am I saying it right?
I think what I was saying was we are the number one gold producer in the world.
Okay.
Now, that I'm saying by head office and Canadian companies,
That's right.
not on our soil.
Right.
We're more like fourth in the world from
Okay.
our soil. But as mining companies are head office in our country, we're the number one producers of gold in the
Number
world.
one.
Yeah.
That's amazing. I
Yeah,
love it.
it's awesome.
Okay. So we covered JDS Mining. Now let's
Yeah.
jump over to Dean's Knight. And this is where your expertise lends a hand to what you're doing at Dean's Knight, but also I think your view is so unique on the resource sector, especially in Canada. So tell us about Dean's Knight.
Yeah, so Dean's Knight's a 32, 33-year-old firm founded by Wayne Deans and Doug Knight, and Wayne's still with us, runs the Canadian equity. So two strategies, Canadian equity or equity portfolio has been running since 93, and then we have a high-yield income fund,
Okay.
which has been running since 1993. And about 5 years ago when I got involved, we started a resource company, a resource fund, only buying resource companies in that fund, but the same philosophy that's been running the firm for over 30 years. So we've had a lot of success, and I am part of that team, but really Kelsey Dunwoody runs the resource fund. She's the portfolio manager,
Yep.
and she's done a fantastic job. And we believe so much in resources, and we also believe that over the last probably 10 years, Canadian portfolios have just had less and less resources in them. Maybe
Yes.
that interest is picking up more.
Yep.
And so we provide really 2 or 3 portfolios that do have a lot of exposure to that part of the market. And we believe that it belongs in in a well thought out portfolio.
Yeah, absolutely. I know that Denius Knight has been very successful. I know 2 of your funds have had over 50% return for investors, which is incredible and very exciting. And I also love that you are implementing more resource into funds. And I think that there's more interest in it, and hopefully that'll continue to grow as a trend.
Yeah, we've had a great year in the equity markets, and you were pointing to returns you've seen. So this year has been a great year, and we're very humbled by it.
Yeah.
The markets change, but we focus less on the market, and we didn't start this fund, or we don't buy these companies, whether they're gold producers or copper producers, because we have a crystal ball into what the commodity is going to do. We're bullish on commodities, but we don't know when they're going to have their day in the sun.
Right.
We focus more on the businesses, whether they're development companies or operating cash flow companies. We spend all of our energy figuring out what they're doing, what their management team has done in the past, what they're going to do in the future, and that's going to be our model forever going forward. We happen to be in a market where, gold's at an all-time high and silver's at an all-time high, and I think today copper might have touched an all-time high nominally, right? Not counting necessarily inflation. So our businesses are very successful, but we believe they're very successful businesses without all-time highs in the commodity.
Right. I think that's a really valuable thing for our audience to take away, is that you're not investing in what is the commodity du jour. You're not following all-time highs or lows or dips. You are following businesses just like other fund managers follow all sectors, right?
Absolutely. It's really about the management team.
Yep.
Because we tell clients all the time, it's not our portfolios managers allocating capital that actually makes the returns. Who do you allocate the capital to?
Right.
Whether it's the Lundin family and the Lundin group of companies who have been excellent stewards and
Absolutely.
value creators, they're really the ones, the management teams and the companies we buy are the ones that are going to dictate your returns. So we're very specific on who we want running those businesses.
Well, and I think to that note, I do want to say your team at JDS and your team at Denius Knight are an unreal team that you've put together. And I know that Denius Knight has a legacy to it that is fantastic. So congratulations on both of those.
Well, it's great to be part of the Denius Knight team. And Jeff Stibber, the founder of JDS,
Yes.
my partner, and
Yes.
And he's part of the Denius Knight.
Long-time partner. You guys have worked together a long time, right?
Yeah, it's been great. And
Yeah.
and we were very excited to become part of the Denius Knight family, and they're great people, and they've done a great job for a long time, and now we're part of that, and we're so excited. We're having a great time.
That's great. Okay, let's dive into it. So, we're having this discussion at the end of 2025. It was a very interesting year for the resource sector in 2025. I think this might be yours and my third or fourth sit down of the year. Right. And I feel like the tone and what we've talked about has been very different every time, which is very quick moving for any sector to move that quickly in the span of a year. But let's dive into some of the big things that we saw in 2025.
Well, I think most people who aren't necessarily involved on a day-to-day basis would realize that gold's at an all-time high, and it's had a bit of a parabolic move, and we spend very little time figuring out why that happened, or whether it was going to happen or not, or what's going to happen next. To tell you the truth, we don't know what the price of gold is going to be next year. Inflation obviously has something to do with it. I don't know how much. I'm not an economist.
Of course.
And I often say, did gold go up a lot, or did all the currencies go down, the fiat currencies? And that's part of it. And so, again, although we observe and we have opinions like everybody else, they're not really anything we act on.
Right.
But we own, 5 or 6 incredible gold companies. We know the management teams well, and they've obviously had great years. I think our question is not what's the price of gold going to be, and that will dictate our position or our portfolio. What we're now asking our CEOs is, what are you going to do with the money? And that's going to be the next layer of your success in owning a gold company. Is they're making a lot of money, and the next step is, what are they going to do with that money? Are they going to pay dividends or more dividends? Are they going to buy back shares? Is there going to be M&A activity? And it's probably a combination of all those things, but specifically for different companies, it'll be a different answer. So we're very interested to see what they're going to do with the capital.
Right. And do you have any particular way that you want to see that going, or are you thinking it's unique for each individual situation?
Yeah, that's a really good question, because we do actually get asked by CEOs, what do you think we should do?
What do you want me to do with it?
Yeah. And I think we have our opinion, but at the end of the day, they probably know better than we do. That's why we invest in them, because their specific situation in their company will be different than the next one.
Right.
And we see a lot of them heavily investing in the mines they have, which is the easiest way to really expand your gold production or your ounces is where you are already.
Your expertise is directly in that.
More exploration on their own sites. I mean, I think Agnico Eagle is probably the best in the world, a great Canadian company, and they spend a lot of money on their sites. And they also have always acquired or developed sites that they knew there was a big future. Even though you can't exactly prove it when you start, they know exploration-wise they got a lot of work to do. And so that's one. Dividends are always nice for investors who have backed management teams that now they're flush in cash, and they're going to give some back to us. And sure, buybacks can work, but there's math behind that. Like, their stocks have run a lot, so is it the best time to be buying their own stock with that capital? So it's a specific question to individual CEOs, but we're excited about hearing what they're going to do.
Okay. Any underperformers in 2025 that you were expecting or not?
Yeah, not expecting. Again, didn't expect gold to go to $4,200. Happy it did. We've been very successful.
You know what? I love this moment for the gold bugs, right? Because they have been calling this for decades.
Yeah, good for them. Yeah, absolutely. And so not like we look at our portfolio and we would tell you on the resource side, and the Canadian equity has a great exposure to resources too, their equity growth. But I think that when we look at the portfolio and the way it's sort of made up is it's sort of three legs to the stool. We own energy, which is oil and gas. We own base metals, which read mostly copper, and then precious metals, which mean mostly gold, but we do have some silver. And I think those are really, for us, the staples of life.
Okay.
And that's always going to represent most of the portfolio.
Okay.
And what we're kind of excited about, and we point out that our oil companies are incredibly profitable.
Yeah.
And oil was $58 for a while. I mean, it's bouncing around the mid-60s to 58. And I think 10 years ago, if you asked somebody in our country that our oil companies were going to make a really nice cash flows, pay dividends, buy back shares, pay down debt during $58 oil, I don't think anybody would have believed you.
We just talked about that in the Marcus this month with Bruce today, that oil prices are not defining how well these stocks are doing right now.
And that comes back to our philosophy that we want to own great businesses and great management teams.
Yeah.
Because it's been a transformation over the last 20 plus years, the Canadian oil business. There was a lot of capital spent in the early 2000s to probably 2010, and we're really reaping the benefits of great investments in Alberta and BC and Saskatchewan, great operators, and I think we're the best. I always say, and I've said this before to you, is that we do two things better than anybody in Canada. We produce hockey players and miners. Now I would say I think we're the best oil producers in the world, from environmental standards to profitability to we have great resource.
Yeah.
So we're super excited about watching our oil companies make money, pay us dividends, and one day, and we don't know when, we're going to have a different price of oil. And those companies we'll be asking them, what are you going to do with the cash?
Let's also not forget a lot of our oil companies in Canada are legacy companies. They have been around for a long time, and they are well-run machines, right? I mean, they're tight. The expertise, the education, the ESG. I mean, they're intriguing companies to watch for sure.
Yeah, and they've grown and grown production every year. They're not spending a lot of capital on real growth.
Yeah.
And some of that there's been some political headwinds in our country against them, and also I think they've been very conservative with their balance sheets.
Yeah.
And they're well positioned to, I think, increase growth if we if we improve our view, I guess, or our political landscape to favor.
I was going to broach that subject with you. I know you love chatting about that, but I think I'm asking more as a general question in Canada for resource and oil and gas. Do you think that some of this will create some pressure to make permitting easier, to facilitate a more open pro-business approach to...
I think it has. I think there's pressure already.
Okay.
I think the past 10 years, we feel from people in the resource business we're going the wrong way.
Yeah.
And I think there's a lot of pressure from Canada and the public, and I think there will be another election in all the provinces and in Ottawa, and I think you want to see people vote that way because we know we're a resource country, and when people say we're not, it's disappointing. And I think oil has taken, the oil and gas, the energy producers have taken it harder. They've taken it on the chin more than the mining guys. All of a sudden, because of the critical minerals and that talk, which is fine talk, the miners seem to be in the forefront and more in favor. But we're still not seeing that really loosen up in reality. Yeah. Talk is, I guess, good because that's a start of it. Yeah. But we have to do more. We have to do more in terms of allowing the resource sector to spend money in Canada and build things. Yeah. And we're the best at it again. So yes, the permitting should be a stringent, rigorous exercise. Yeah. But let's trust industry. We're really good at this, and let's loosen it up a little bit.
Yeah. I agree with you there, and it also is a great way for us to create independence as a nation, right? So there's lots of good that comes from it. I think another thing we've talked about is the struggle between a generational shift of understanding how much we utilize of our resources in this day and age. And how much we need, and that we need to be more proactive in pulling that from the ground. And there was definitely a shift. One thing we talked about last year was this big shift to the electrification process. Right. And I don't know how many people realized just how much oil, gas, and resources would be required for that shift.
Yes.
Right?
Yes.
To the electric battery. And then what fuels electricity, right?
That's right. Where's it coming from? I mean, we're so fortunate in this country. I think probably that could be some of the reason that we took it for granted. Maybe. I think our attitudes are coming back. But you make a good point. I think like the AI move is the big one, right? Where everybody is head over heels into this AI. And I think it's going to be a wonderful tool for us in our productivity. But AI is one thing. It's energy.
It is a lot of energy.
It's all energy. And if you don't have the energy, you don't have AI. And again, we're a country like the United States that has abundant, affordable energy if we want to continue to produce it. And so we have a big leg up on many countries in terms of building data centers and utilizing the real hub of AI in the future. But it is just energy. Like if you don't have that, you don't run all these computers.
Absolutely. I think I heard I don't know the exact number, but a Chat GPT search, the amount of energy that it consumes just with that is.
I heard, and I don't know if before I say it, I should have looked it up. I should have AI'd it. I should have chatted it, right? But I heard that BC Hydro asked people not to thank Chat GPT.
Because it's just one little thing that doesn't.
First of all, please.
I've never thanked ChatGPT. No, but I won't do it going forward.
Yeah, I think people are polite. And I'm not saying it's a bad thing. It's just that please don't thank a machine. It doesn't matter. And secondly, it's just energy, the thank you. If everybody did it on every search, there'd be a lot of energy. I thought it was funny, and we should qualify that. Because I heard that, and I hear a lot of things.
Okay,
I usually qualify before I say them. But anyway.
Well, we should thank the humans in our life, but maybe we don't need to thank the computers.
That's right.
Okay, the other thing I want to ask you about is just your thoughts on some of the M&A activity we saw this year. Juniors, majors, whatever you found interesting.
Yeah, so I think, and I don't know, there's a bit of speculation that we probably haven't seen it yet.
Okay.
Like that, there's a lot of
percolation maybe?
Yeah, I think there's a lot of pent-up demand for this. And we see that tech Looks like it's going to be merged, or they call it a merger. I would say it's a takeover by Anglo.
What do you think about that?
Well, I think that our biggest mining company was in a little bit of trouble, and I think Anglo's has not had the best time in the last few years, but they're both coming into obviously a high in copper, and they do have some great assets. So the company is probably stronger together. I thought it was very good that Anglo did make a lot of concessions to make sure that Vancouver and Canada was a big part of this country, big part of the company. I think the government's pushed for a little more, and maybe that's a good thing. They probably extracted a little more of that, keep a lot in Canada.
Yeah, advocated for
and
it.
who would want a mining head office in London anyway? Like, it should be in Vancouver or Toronto. I mean, I favor Vancouver, but so I think we're going to have a lot of people working here in Vancouver and Toronto for that much bigger company. So I think it's okay. Yeah.
I was in Perth just a few months ago, and when you're walking around downtown and the buildings are Rio Tinto and BHP and they're all right next to each other, the one thing you can't discount is having all those people right next to each other has value.
It has incredible value.
Yeah.
And the mining talent is in Canada or in Australia.
Yeah.
It's not in London.
No.
But the bankers are in London, and the lawyers are in London. And we would even say, coming from Vancouver, the bankers and the lawyers are in Toronto too. And that's why a lot of companies move there. But there's a lot of mining talent in Toronto. Yeah. So it's really about, the talent around you, from geology to engineering to, to metallurgy. We have it all. So it's a better place for a head office, period.
It fosters also new growth into the sector as well. It brings new people in when you have, lots of people around and developing from there. Okay, so we'll watch to see what happens in 2026 then with M&A.
Yeah, I think, like I said, what are the companies going to do with the money? There's a lot of cash.
Okay.
And they're going to want to grow production. And I think our concern, not a concern, we really trust our management teams, but in the past, sometimes when they did have a great price of gold or a great price of silver or oil, when they get cash, maybe they don't spend it as wisely as, and hindsight's 2020, but they've been pretty disciplined, I think, our companies, and they've been pretty conservative, but I think there's going to be a period where we see more activity.
I mean, coming out of a difficult market, we learn to be really careful.
Yeah.
Right. And so coming out of that, people are usually there is a moment of being, as conservative as possible. And hopefully that continues, because it's always great for a balance sheet. Okay, let's dive down into exploration. So is there any activity or trends that you saw as far as, purely on the exploration plays?
Well, the good thing, and when I say the good thing, I mean that exploration is so important to the future businesses. And that's why in Canada we have some very good tax incentives for people to invest the flow-through shares in drilling for resource, whether oil and gas or whether metals. So right now, if you have a good idea and a good piece of dirt, the market is open. And the financings are just, they're coming at you like hotcakes, right? So we're going out like hotcakes. So it's a good time.
Yeah.
And always remember, exploration is a very risky game.
Yeah.
But there can be great rewards. But I think what we have to understand is the rewards are really for the next, level of production, and that's years out.
Yes.
And we talked about permitting. So first of all, you have to drill off a economic deposit of size that somebody's interested in financing and building. Then you have to permit it. There's a lot of steps to go. So we're a long ways out. And I think exploration went through a period where there was not a lot of investment.
No.
Now we're seeing it back, and it's really important for the next 10, 20, and 30 years of production of these metals that we need.
Yeah. I mean, from greenfield all the way to production, there's a lot of opportunities to make money and lose money as an investor.
Yes.
And all of the above, right?
Yeah. Absolutely. I mean, we do very little exploration, and we would say that at Dean's Knight as investors, we would say that even what you would see as maybe an exploration company, we already think that the deposit has been reasonably defined. We know we feel like we know there's an economic mine here.
Right.
and it's going to take some time.
Yeah.
And there'll be many twists and turns before that is a mine. But there's a lot of value in, some of these incredible discoveries, and now, developing resource companies.
And I mean, look, for you to get to a place where Dean's Night gets to a place where they get involved, as you said, it can take a long time, and we need that capital to flow through to the explorers, and that time
Absolutely.
to pass, and those exploration programs to happen, for us to find new discoveries. Because I think we need new discoveries now, don't we?
We do, absolutely.
Yeah.
And some are going to make it and some are not.
Yeah.
And I think also, if we told people who don't follow the resource market how long it takes from the first drill hole discovery to a mine, it can be 20 years.
Yeah.
It's not, we have all sorts of different averages, but 10 years is like a pretty fast
Very active.
That's a breakneck speed.
Yeah.
Right?
Yeah.
And
absolutely.
it can happen. It's happened before, but
Yeah.
a lot of times these deposits get, we'll see deposits even get bought by a major and then sit there and not really get developed, and then
They sit
pop
on the
back
balance
in.
sheet.
Yeah, and there could be many reasons. It could be political. It could be permitting. It
Price
could
of
be
the commodity.
Yeah, absolutely.
Okay.
So they the great deposits, we do end up getting to extract them, but sometimes it takes a long time.
Okay. Going into 2026, any words of advice for our viewers? Any thoughts, deep thoughts by Brent?
Well, we always, the way we look at things, and so we don't give a lot of advice, but, understand what you own, and understand, not just, chasing the trend. Like, try to either have professionals that understand it, or if you're good at it, do understand what you own. And if you own a really good gold company and it's done well, if it's a really good run business, there's no reason why you can't hold it for a long, long time.
Yeah.
If you're just chasing the price of gold or the price of silver, I guess you're increasing your risks.
Yeah.
When we look at our gold companies, if gold goes down, it's very likely the share price is going to go down. But we're not worried about that because we know the business.
Right.
And we understand what they're doing. And we know they're also going to make a lot of money at a different price of gold.
Yeah.
And give us a price. We always say that because we do get asked that constantly. What do you think gold's going to do? We don't know. And do you think your companies are overvalued? Well, you have to give us a price of gold. But these companies are really successful. They're going to make money in a much different price of gold if it's lower. And again, what are they going to do with the cash flow they're making now? So that's about the best advice I can give. It's not great, but
you're staying in the resource sector, right?
Oh, absolutely, absolutely.
Right.
Yeah, no, we don't. I mean, Warren Buffett always says, when the tide goes out, we'll see who's wearing clothes.
That's right.
and we think about that statement a lot because the businesses we own, if gold goes down, we're really not worried about the gold companies we own. They're great businesses, well run. And then, when the price of the commodity comes down, often that's where you make the most money.
Yeah.
Because those businesses who have money
are the only ones that are still...
And they will make transactions. And they've done that. That's what they're living on now.
They'll be the kings of the castle, right?
They'll
get to, they'll have authority to do the M&A activity. They'll be the only ones who can raise money. They'll be the only ones who can
They may have the money already.
Yeah, they may have the money. Yeah, absolutely.
So there's all kinds of opportunities when the commodity is moving.
Yeah.
You just don't get the big return when the commodity's going down. But what happens when the commodity's down some is look out a few years.
Yeah.
What's going to change. Right?
Yeah. And I think, to everything that you've said today, it's a reminder, too, that if you want to invest in the resource sector, and I hope people continue to do so, I think especially the resource sector, it's really important to get professional guidance. I think it's so hard.
We certainly think so. We may be biased.
I've been doing this a long time. I was a broker for 10 years, and I still struggle to walk the floor of PDAC and know, what are the top picks on that floor. I mean, it is something where professional guidance, I think, is very
and
valuable.
I think you do have to take a long-term view.
Yeah.
And that's why chasing the trend or just getting involved because gold went up a lot.
Yeah.
I think you have to take a long-term view.
Yeah.
There can be real volatility.
Yeah.
But the volatility is where the returns are too. But you have to have a long view.
Okay. Awesome. Brent, it's always so great to chat with
awesome,
you.
Anna.
And I look forward to
Enjoy it.
chatting in 2026.
Great. Thank you.
Thank you.